All right, well, our next guest says the reaction we've seen here in the U.S. markets is really due to Europe. Raghuram Rajan was the former IMF chief economist, and he's now a professor at the University of Chicago Booth School of Business. He's also the author of Fault Lines, which details the serious flaws remaining in the U.S. economy. He joins us now from our Bloomberg studios in Chicago. Professor Rajan, great to have you here on In Business. Let me ask you first, when you're looking at these daily gyrations, should investors be taking away anything from this as an economist? Do you pull or extract any data from this, or is just fear and confusion?
Well, it's fear and confusion around fundamentals which are worrisome. Two big pieces of concern. One, the slow growth in the U.S. economy, especially with the growth revisions that came in a week or so ago. And the second is, of course, the European situation. How far does it reach? How bad does it get? And the problem here is that investors can put the worst case scenarios on both these pieces of news, and you can start thinking, well, what if Greece goes, Portugal goes, France goes, and eventually perhaps even Germany goes? Well, when you focus on those tail risks, the only answer is sell. And so we're veering between people who are focusing on those tail risks and then coming back to normalcy and saying, well, you know, that's a long way from here, so maybe we should think about the strength of companies, which is still pretty strong.
That's right. We've seen very strong earnings for the second quarter, but let me get back to the sort of the tail risk or the black swan, if you will. We haven't heard that word in quite a long time, but it doesn't surprise me that investors would want to be ahead of a next black swan event. I think we have a chart here. We're looking at credit default swaps. It really indicates that we have a chart showing U.S. credit default swaps versus SocGen, Societe Generale, as well as France's sovereign credit default swap spreads. And you can really see the U.S. credit default swap spread not moving, but we can see that they have blown out where France and Societe Generale, the second biggest bank there, are concerned. Do you think that movement is unwarranted? We've heard from the rating agencies. They have affirmed their AAA on France's sovereign credit rating, but the markets are suggesting otherwise.
Well, I think there is a need for some concern because the Europeans haven't yet come clean on what their banks hold and what the exposure is, first to the periphery and then to Spain, to Italy, and eventually to France. So we need to have a better sense of what it means if these sovereigns take a hit and what it means to the banks. And the banks are so interconnected with the health of the sovereigns that clearly you have to have some worry, because if these banks go under, the liabilities that come onto the sovereign are also pretty substantial. That said, I think we are some distance away from having to worry about France defaulting, and we are some distance away from worrying about the consequences for French banks. So I would say that you know, it is quite possible the markets come to terms with this and settle down, but it is something that people do worry about.
All right, we have to leave it there, Professor Rajan. Thank you so much for joining us here on In Business.